The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, as the dust settled on Thursday's trade action, it was a bit different than how we started off the day on Thursday, especially in the soy complex. We lost a lot of momentum around midday and never seemed to recover. We had more Chinese cancellations of wheat purchases that are having an impact in the wheat markets overall, pressure in corn, pressure in cattle. Got a lot to take a look at. Oh, by the way, hotter than expected PPI numbers out Thursday morning. So let's dive in and talk about things. Joining us for a conversation, Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, good to catch up with you again. And we were chatting a little bit before we went on the air. No shortage of topics to discuss in this market. And man, how quickly some gains can go away, especially in that soybean trade on Thursday, Brian.
Yeah, this morning prices, it's funny when the market's up, then you can kind of see all the reasons why the market could be up. And some of that's, there's hot conditions in parts of Argentina, parts of Brazil, too much rain in Brazil for harvest, or Argentina for harvest. And then all of a sudden beans are, heading lower. It's like, wow, the oil and the this and that overdid it, but it was just what we call a volatile day. Beans did, we'll start with the bean market here, did finish mixed on the session. And if you didn't know what happened during the day, you'd think it was a pretty quiet day. But what did happen is March beans went off the board today. May became the front month, and May pushed right on through the 50-day moving average this morning. And I think that uncovered a lot of buy stops because the soybean futures contract have not been above the 50-day moving average since mid-December. So for some real strength there, the market kind of lifts up, and it's kind of like shooting the ball in the air. It gets up so high and then it falls over. New buyers fail to materialize. Still a really, really nice looking upturn after finding its low in late February. But as far as like new news, I mean, you're kind of scratching, I think. You talk of Ukraine, the largest exporter of sunflower oil before the war, right? Now maybe less soybean and less sunflower oil for the year ahead. Canola oil's been moving up, soybean oil up, energy prices up, short covering in beans, but just not enough to hold it today. On top of that, if you look in the Midwest, you're getting some pretty nice rain today in parts. And although it may not be copious, it'll be enough to say, maybe not so quick in this hot, dry spring. And then corn hit some resistance, and that fell off. And then wheat, another big cancellation there on the world front this time. China canceling 1 million metric tons out of Australia, Jesse. And then you had some big turnarounds in the livestock futures as well. All negative. So kind of a rough day.
Yeah, kind of a rough day. In terms of the soybeans, with May becoming the lead month now, and you mentioned some moving averages there, I have to think that 50-day moving average around that 1201 mark, and then probably the new high we put in on Thursday are probably some of our new areas of overhead resistance in soybeans. Brian, what do you think?
Well, I think so. And I think the other thing that has happened here, probably today, I'm going to say probably today with certainty. Does that make any sense? Probably with certainty. But I've talked to farmers who, they had some orders floating out there and they got hit today. So they sold cash beans today. So I think that's another thing when you look at, for example, the May futures contract, the most recent low here on the 29th was 11.44 3/4. So let's just say 11.45. And all of a sudden you punch higher today to 12.17. So that's what, 55, 65, 72 cents. Let's just call it 70-cent rally. That's going to bring some farmers selling to the table, especially those who kind of felt pretty bad from early February onward. Now we're back to where we were in early February. So you get some farmers selling, some technical selling, and just kind of a tough day in a lot of commodities. It might have just spilled over into beans as well. Wheat was kind of ugly all day.
Yeah, I think that's a good point. How about those corn charts? You mentioned some of the pressure there. I keep my eye on things like the 20-day and the Bollinger Band here on the May charts for corn. And two, I think maybe some farmer selling has been going on in this corn market as well, Brian. I mean, talk about chart wise, just what you're seeing right now in terms of May corn and moving on.
Sure. So a couple of things today to note. The corn market had been kind of pushing up, not in a fast fashion, but right up against or just barely through the 40-day moving average, but being stopped by the what we call the upper Bollinger Band. Then you had a couple things happen. The market on the stochastics, if you're a technical trader, went well into the overbought territory. So it doesn't seem like, and it's a momentum indicator. So the momentum indicator went up to the overbought. And then it looks like today we got a crossover today. So that would be a sell signal on the technicals and stochastics. But also, you've got a thing where here, not only did it go up against some resistance point, but from my perspective, you've got a recent low in the May corn, 408 and three quarters. Yesterday and the day before, we're up around that 445. That's enough of a rally that is going to bring some farmers selling out. Farmers who kind of didn't feel good about the way things plunged the last 2 weeks in February got those values back, and I think that pulled some more into the pipeline. Wheat's been the real problem, though. Wheat is just having such a struggle with China canceling over 500,000 metric tons of U.S. purchases and now 1 million metric tons of Brazil. Australia, and ideas that Russia's just going to keep the pedal to the metal, and almost doesn't matter what price it is, they're willing to let it go. And maybe they've got expectations for another large crop. That remains to be seen.
No, and that's a great point. And with that wheat trade too, I think there's been French cancellations in there as well from China this week too. So I mean, another one. But one has to wonder, what is China doing? Are they going to go get cheap Russian wheat? Are they going to get corn because corn's cheaper potentially? No one ever really knows quite exactly what China's doing. But obviously, as they're making moves in this market, it's having a substantial impact, Brian, like it normally does.
Yeah, and it's for me, the challenge is when you look at a country that's well over 1 billion people, and who's buying what and where. There's just a lot of things that happen. So we can talk about the Chinese government buying maybe to build some surplus, right? That probably smart when things are low. If you can't produce all that you need and things are on sale, you buy and then figure out how to store it or let somebody store it and eventually take delivery of it. China has stated for years that they're moving towards self-sufficiency, but we got to see what that looks like. Can they grow GMO corn and whatnot? But yeah, these cancellations are a bit concerning. I don't think it's a political statement. I just think whoever bought doesn't necessarily need it. Probably thinks they can source it cheaper somewhere else, and if there's any penalties, pay those penalties, and then they'll get a better bargain. And Russia has, as we stated earlier, they've just been a thorn in the side. Exportable wheat worldwide is very tight. And we saw again this week talk that India likely becomes an importer rather than an exporter. But it's a tough marketplace when you've got one huge supplier that keeps undercutting. And I think the rain, too, on the radar is pretty good for soft red winter wheat country. It's going to benefit.
Brian, to the producer price index data out Thursday morning, hotter than expected, double, I think, what the trade expected, right around there. Sticky inflation, everything kind of going with that. I know the dollar moved higher. I would have to think maybe that news had an impact to some degree in the commodities and livestock as well on the day, Brian.
I gotta think so. I don't know how it wouldn't. Dollar gaining 54 points as we speak. To put that into some perspective, the dollar taking a nice pullback here the last couple of weeks. Boy, surprising that grains went up during that time period, right? So when the dollar was weakening, all of a sudden you get the kind of this punch higher in the dollar today. It's still where it was here on the 6th, and then you can go back to the early February. And it's been higher, but again, that did not help today's cause at all. This inflation thing that is sticky. The words keep the word that keeps coming back to mind is transitory. You and I talked about this when it was transitory. And like, well, somebody please tell me where transitory is when it's month after month. And we don't hear that term anymore, right? So now this idea of a soft landing and, we got core inflation down. Yeah, not so fast. And who knows that? You and I know that when we go out and go anywhere, it's sticker shock, and we're not seeing it. To me, I'm not seeing anything tell me that the sticker shock is over. The other thing that I think kind of a hindrance to the consumer, at least now, is all of a sudden you go to fill up at the pump and it's pricey again. And today we saw crude oil hit $81 mark, over $81, highest in multiple months. And reading an article this morning talking about the potential that supplies remain tight through 2024 now, as expected increased production from OPEC countries is not likely to happen. Economy moving along. So everything's a little kind of tough today for the consumer. Energy's up, grain market's down for the producers, cattle prices, huge reversal.
We are talking today with Brian Doherty, Senior Market Advisor at Total Farm Marketing. And let's talk a little more on livestock, Brian. Huge reversal in those cattle futures, both the fats and the feeders. I mean, to some degree, I would say what we were talking about has to go with that economic data, but then too, this market has felt like it's kind of gone sideways. So maybe is this the point where we see a pullback in cattle potentially? I don't know. Maybe there's something on the charts that you can point us towards. What are you thinking, Brian?
Yeah, well, I'm thinking a couple of things. One is that if you look at the April contract today, it went into a new nearby high this morning. That means on this trend since the market bottomed in later 2023 and 190.27. What's so magical about that? The market left a gap, top side of the gap, voila, back in October, at that same exact price, which is today's high. So 190.27. So the old theory is, well, gaps get filled. Boy, that gap got filled, and somebody rammed the sell button forward, or the sell throttle forward, and really took a hit there. The bigger market that really got hammered today was the feeders, losing $3 to $4. I think most of all this was technical in nature, and sellers are pushing stops up underneath the market that's sideways to higher, knowing that if it breaks, the break usually in those markets can come kind of fast. And that's what it looks like today. Now we got a big reversal day on the live cattle chart and a big reversal day on the feeder cattle chart. So all of a sudden your technicals, which look pretty good after yesterday's firm close, don't look so good today. That has technical traders concerned, and I think some were just heading for the sidelines today. And I wouldn't be surprised if we saw producers hedging more aggressively when they saw the turnaround today as well. This market just can't get the wheels to move higher, and it makes one doubt if we can get back up to those prices we saw last September when the market peaked.
It just feels like, thinking about hitting that same price level you mentioned, at that just over that 190 mark. I mean, and to that point, hedging and risk management here, have to think that if you haven't done some sort of risk management in this cattle market, it's probably wise to maybe think about it before, this thing maybe collapses any further. It'll be interesting to see how we finish the week, Brian, but I'm a little uneasy looking at some of this chart action that you're talking about here on Thursday, Brian.
Yeah, I am too. And when you look at kind of big picture stuff, and you can look at a million different things, we know we're going to be relatively tight on supply, to very tight. But that doesn't mean the market has to go up. It may already be into the marketplace. So I wouldn't get too complacent, is my point, or comfortable. Today is a really quick reminder just how fast things can change. We saw it in cattle. We saw it in the bean market today. Things can change in a kind of a time window of either questionable demand on world commodities or questionable supply. We're seeing again rallies that they're met really quickly with selling that has us concerned. Now that being said, this morning we had the choice cuts up $1. And they're trading over 310. So you can't get too negative on this market just yet, but today was kind of a warning shot across the bow that we kind of need to really think about this. Selects over 301. Boy, that's pretty firm footing.
Well, Brian, hogs had a mixed day Thursday, and then I know last week we talked about dairy that's been struggling. So I guess I'll let you take your pick here. Hogs, dairy. Any other notes for us in the kind of the protein arena here today?
Yeah, so just kind of a high flyover on the hog market again. Still really good summer value, I think. Consolidating well. Had a hook reversal 4 sessions ago. That means it went into new highs. Finished the day down, but didn't take out the previous day's range. So the bigger picture perspective is good consolidation, 10-day moving average holding. Milk, interesting market, blew up yesterday for a while. Didn't finish near the high, but got really cheap, really quick. Had a big up day yesterday, a big up day this morning, giving most of those gains back, but up 9 as we speak, 16.28 in the class 3 on the April contract, but was as low as 15.76 2 sessions ago, and as high on February 26th is 18.13. So a lot of volatility. Growing concerns of disease issues or problems from the smoke in the panhandle and what that means to the health of cattle, and in particular the large dairies there. So that may have provided a little bit of boost or turnaround. Just the perception of it. Remember, we're down about 75,000 cows from a year ago, so production numbers are down. And the other thing, that dairy industry that, I don't know how bullish to be on this, but there's going to be a tight heifer supply for this foreseeable futures as they, produce beef calves. So I don't know if that herd's going to have much chance to really grow here. So the thing that has to happen, though, to get milk prices up is we've got to see the demand market pick up, down from 23 from 22, and not a great start here in 24.
Brian, always appreciate the insight. I know if folks want to reach out to you, have a conversation, multiple ways to get in touch with you there at Total Farm Marketing. How can they reach you, Brian?
Yeah, multiple ways is right. So the best way is phone call, 800-334-9779. Just give us a call, ask for Brian. There's a couple of us. If you want to talk to me, I'm the Brian with a Y, or email me, Brian with a Y, BRYAN at totalfarmmarketing.com. Shoot me your questions, comments, constructive criticism, whatever. We're all ears, and let's just make sure that we try and help you if you have any needs or questions or concerns, that we address those in an appropriate manner.
You can also find them at totalfarmmarketing.com. With that, Brian Doherty, always good to talk with you, sir. Have a great weekend. We'll talk to you next week.
Okay, Jesse, thank you very much. You as well.
Thank you. That's going to do it for Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.